You got me running, got me running. Shake it, shake it, shake it, feel that. Raise your hands up. Raise them up.
Hello and good day, everybody. Yeah, so welcome to the Forex Trading Asia Daily Currency Call episode 284. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Yeah. So as we know, RBA released their statement yesterday. So I'm going to get Kim Hong, currency analyst and LCMS traders, to summarize the statement and share his views about it. Kim Hong, to you.
Happy Wednesday, everyone. Okay, so as usual, as expected, okay, the Reserve Bank of Australia held interest rate unchanged at 0.1%, and they also held their quantitative easing unchanged as well. So yesterday I highlighted 2 points. Okay, the first point being whether the RBA will consider future bond purchases. Okay, so with regards to that question, they actually wrote in the statement that they will consider future bond purchases only in their July meeting. So that's actually like 2 months from now. So I guess they want to have more time to evaluate the situation, specifically the COVID scenario in Australia, okay, before deciding whether more quantitative easing is required. Okay. As to the second point, regarding the economic projections by the central bank, so they actually included in the statement that they had revised upwards its GDP growth forecast to 4.75%, okay, while unemployment rate has been revised down to 5%. And at the same time, they also expect that inflation to be 1.5% for this year, okay? But keep in mind that the monetary policy statement will be released this Friday at 0930 GMT plus 8. So I believe in the report, okay, in the statement that will be released, we will get a clearer picture of what the central bank was discussing about, and a more specific, detailed insight into the central bank's projection of 2021 and 2022's economic growth forecast and unemployment as well. Okay, so that's all for me right now. Thank you.
Okay, thanks for that, Kim Hong. So right now I'll get Scott Andrews from Forex Briefcase Australia to share his outlook on the dollar index. Scott.
All right. Hi, everyone, and thanks for joining us again as well. So, look, US dollar did get a lift. We had some comments from Janet Yellen in regards to interest rates, and the market, took those comments. And really what we actually saw was a more dramatic lift to the fear of, inflation. And that actually hit equity markets more than it did the US dollar in regards to giving it a lift. So we've seen it interact with, recent resistance at around 91.30. And again, I was monitoring things, and it behaved in a way that it wasn't really an environment for a sell trade, even though it was showing signs of fatigue, because honestly, those comments were a little bit out of step to what Janet Yellen normally does. It was, she was in a economic seminar presented with the Atlantic, and it was just, I'm not really sure, but she backstepped a little bit and said that, that there's no immediate concerns, and it was just a little unusual, honestly, and that seemed to hold the US dollar up a little bit. But in the other currencies, we're actually seeing a bit of a bounce, for example, the Aussie dollar that I monitor. So For now, there's no real significant trade idea. I just want to talk about some upcoming news as well. So what I'll do here is we'll go across and I'll bring this. I've just got I'll bring up new share and I'll go screen 2 here. So what I've got here, guys, is I've got the EcoFin platform that we have with LCMS Traders Club. So what I'm looking for tonight is we've got the ADP employment change that comes out at 20.15, and that's GMT plus 8 time zone, and you can easily change that with the settings section. So I'll be paying attention to that, and I'll also be paying attention to the ISM services PMI. So we'll just see what happens. But currently, I'm not tempted to get into a trade right now, and we'll just have to wait and see what the US session brings, what this news brings as well, before saying, okay, we've got a continued risk-off sentiment, or we've just got, it was a little bit of a jittery market, and we'll see the US dollar reject again. So time will tell here, guys, but stand by for more updates in the next currency call tomorrow.
Okay, thank you for that, Scott. So right now we will jump into the currency in focus today, which is the pound. So today we are with Jin Dao Tai, founder of LCMS Traders and a multi-million-dollar trader, trading account with more than US $14 million on a daily basis. Yeah, so Jin, I'll pass the time to you now for the currency in focus.
All right, good morning, everyone. So it has been a bit of a weird market recently, especially for the pound dollar, and you can see across the pound pairs. What has happened? Not that much, right? First thing I'm going to show you is looking at the news. I'm using Forex Factory here. Some people did ask me, like, why don't I use Forex Factory? So, giving it a bit of a change this time. Looking at Forex Factory, what happened over the past couple of days? Oh, wait, that's too far. See, this is what happens when you make me do different things. I get lost. Okay, so on Monday we had no pound, the UK on holiday. It's a May Day observance holiday there. And then on Tuesday, again, not a lot of pound news. Some PMI numbers came out, not a big change, was 60.7 expected, came out at 60.9 realized. Again, not too big a difference. But if I show you straight away how it looks on the charts for the pound dollar, this is the pound dollar on H4 time frame here. We can see that for this week, the pound dollar alone has seen a good 100 pip range, a good 100 pip volatility. It shot up very early into the week, hit that 1.3911 level, came back down, tested 1.3836, and now again looks like it's trying to test 1.3911. Traders Club members know that on Monday night we spoke about the pound dollar. I do think that we might see the pound dollar retest that 1.4 level again. So what I'm actually looking out for is to see whether the pound dollar can break above 1.3911 for that potential retest of 1.4. But given that, the way the prices have been moving, you want to actually be a lot safer, not a little bit safer. You want to be a lot safer when you consider this move, this potentially 80 pip move upwards. Let it go up a bit more, let it close a bit stronger above this 1.3911 level before you look to see it go towards 1.4. There are several reasons why we think that the pound dollar could get to 1.4. Coming back again to the economic data, today no pound news at all, not a lot of pound news happening. But what you're going to look out for is tomorrow, Thursday evening, 7 p.m. GMT plus 8 Singapore time. For the UK, we do have the Bank of England monetary policy report. We have the monetary policy summary and also the bank rates and the rate votes as well. What you'll notice here is that bank rate for the UK is expected to hold at 0.1%. The voting in this case is probably going to hold at 0.09, which means everyone's probably going to vote to hold rates. They don't think that there's anyone who's going to be talking about cutting rates in this month or in this period, although the statements or the views coming out has always been quite consistent, where the Bank of England is looking to hold rates lower for longer over this period of time. So you see again that consistency in the approach from the BOE is likely to give a level of comfort, is likely to give a level of confidence that they are seeing that the market or the UK economy is performing. They're giving it time to develop or to build, and then that shows that confidence towards the UK economy. And then on Friday, we have the non-farm payrolls, which is the US dollar focus there. On Friday, no pound news again. So coming back to the charts in this case, given that we're probably going to see the market again be a little bit quiet, spike up a bit more, or spike around this 1.3911 level, I'm still anticipating for the Bank of England rates decision statement, policy summary, and all that tomorrow night to push the pound dollar up above 1.3911 towards 1.4. So be extra safe in this case. Look to buy only if it gets above 1.3925. If it gets above 1.3925, you're looking at 20 pip stop loss for a good almost 80 pip take profit level, way above, well, very close to a 1:4 risk reward ratio in this case. Adding on to the pound dollar, if we do see the pound dollar shoot upwards towards 1.4, then you're likely to see on the euro pound, now that it's broken 86.51, it could repeat what happened 2 weeks ago, where when it broke that support level, it went straight down, tested 85.80. So this again might be a scenario. I don't think it's ready yet. We might want to see a little bit more of a downside, but you could be looking at about 86.35, at about 86.35, 20 pip stop loss for a good 40 pip, 50 pip take profit level towards the downside, towards that support level of 85.80.
Okay, thank you, Jin, for the analysis on pound. So just a quick disclaimer here again, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. So as Jin has mentioned, Friday there will be the NFP data released. So I'm going to get the panel here. We have Jin, Scott, Kim Hong, and Daniel to share their views and opinions about the NFP. So let's start things off with Kim Hong. Kim Hong, you take over for the NFP.
Okay, so yes, NFP will be out, the US NFP will be out this Friday. Well, my personal view is that jobs will highly likely, possibly continue to increase for April, okay, while unemployment rate is also likely to decline. Why is that the case? It's because if you realize that the trend, the number of cases, number of COVID-19 cases in the US, okay, the trend has fallen, well, by quite a lot, okay? So in January, it was around like 200 over to a maximum of 300 over 1,000 cases. But in just one quarter, after one quarter, like right now, we're in May, number of cases has declined to like 44,000 cases. So there is obviously Biden's vaccination program has actually helped in speeding up the whole containment of the virus. So with that, parts of the states has beginning to ease restrictions, okay, thus allowing normal economic activities to resume. Okay, people are starting to go back to the labor market, to the workforce. Okay, so yeah, my take is that the report may actually be better than what the analyst market is forecasting.
Okay, thank you, Kim Hong. So yeah, Kim Hong is looking at a more positive outlook on the NFP. How about you, Scott?
To, logically, like Kim Hong explained, why would, job creation be up? And it would be, due to that. Now, if it is higher than expected, you want a plan, and then you also want to watch to see how the market reacts as well. And then if it's bang on expectations, how do you react? And then I think the most unlikely scenario we'll see is that it will be below expectations, and expectations is 978,000 for NFP. So if it is below for some reason, then we could see some real opportunities. But again, that is unlikely, but always have that in the back of your mind if you've got a trade on and you're a little aggressive with trying to get in before the news. Just be cautious that sometimes things can happen, but I'd have to lean towards, yeah, definitely, at least expectation and maybe slightly beyond as well.
Okay, so Scott is also looking at more of a positive outlook. All right, so let's get Daniel. Daniel, what are your thoughts on the NFP?
Okay, I mean, it's similar to Kim Hong and Scott. Reason is very simple. Previously, we can see a lot of US economic data is doing very well. It indicates that the US is recovering very strongly. I mean, just last night, Scott was mentioning, Yellen was mentioning that maybe you need to increase rates to control. Does he know something that we don't? So my feel is that the US economy is really on the road to recovery. Vaccine, COVID infection probably is going down. Stimulus package is coming in. A lot of job creation will come in. I'm in the opinion, I'm very more bullish in this case. I'm going to go for, it's definitely going to beat previous number of 916K. My personal opinion is it's going to be go past 1 million. This data NFP is going to shoot past 1 million, indicating that a very strong recovery coming in the US. Lots of jobs are all coming in and very good recovery. So my gut feel is yes, it's going to be past 1 million, strengthening the US dollar.
Okay, Daniel with the very bullish outlook. So let's get Jin. Jin, what are your thoughts on the NFP?
Hey, these guys have said everything. What else is there to say? The NFP is going to be a good number. The unemployment rate is going to be a good number at 5.8, possibly 5.7% unemployment. We are reaching that natural unemployment rate for the US. But what I do believe is that we're not going to see a lot of volatility during this news release because of that expectation. Everyone expects it to be such a good number. It's probably going to be a bit priced in as we lead up to this news event. But what I do want to tell everyone here is that, as much as you're looking at the US dollar, thinking all about the non-farm payrolls, I'll show you this screen here. Looking at the news on Friday, we do have at 8:30 p.m. US non-farm payrolls. But take note, the Canadian employment numbers and unemployment rate is going to be released at that same time, with employment change expecting a minus 153K, unemployment rate expecting to go from 7.5 to 7.8%. So what it looks like is we might see some big volatility coming from the US CAD in this case, especially with, if the non-farm payrolls is a bit of a non-event, the CAD is going to bring a bit of volatility into prices. And then, although I'll tell you more about this on Friday, but look at the US CAD here on the H4 time frame. It is primed, ready to go in a particular direction. That red line might give you a hint towards the upside, but there might be further analysis to go through on the US CAD. So despite what everyone is just talking about, focusing on only the US dollar, there are going to be good trading opportunities across the board, not just because of the US dollar, but possibly the Canadian and possibly even the yen pairs as well. So yen pairs tomorrow, Canadian on Friday, we'll go through all that.
Okay, thanks. Thank you so much, the panel, everybody, for giving your opinions on the NFP. And we have come to the end of the session. So yeah, see you guys tomorrow for the yen and gold analysis. Thank you and goodbye.